Hello friends, welcome to Stock Market Wizard, and this is a learning video. So let's discuss few of the basics of stock market. I'll give a brief in this video and I'll do more of the videos about the basics and few of the learning tips. So like stock market in India is basically divided into two groups, NSE and BSE. NSE goes with National Stock Exchange and BSE goes with Bombay Stock Exchange. And now let's dive into the stocks, or which are also known as equities. So this is one of a famous stock or equity known as Titan. So right now, what do we need to know when we invest in a stock and when we trade a stock? We need to understand the price or the fundamentals of the stock or equity. Fundamentals is a completely different segment, or it's a completely different topic over here. So right now I'm going to concentrate on the technical stuff, because if you want to understand few of the fundamentals, you got to have some knowledge about accounting or some basic accountings, like how to read balance sheets, what are the profit and loss statements, net income and stuff like that. We'll go slowly into that. So right now we'll understand the technical views and how to view a company or equity or stock, anything in a technical perspective. I use TradingView app or TradingView terminal to read the charts. The chart is something which represents the price movement of a stock or equity. So this is the price movement or stock, how Titan is performing, and these are known as candles. These all are known as candles, and there are different ways to view a chart. This is a candlestick, and this is a basic line chart. You can see this is a normal line chart. This is how price is moving at 1700, 2018, came back, went to 2000 change, came back. This is just a normal line chart, and there's another famous one even. It's a Japanese model. We won't be needing this or using this mostly. The primary one that I use or I recommend would be candlestick pattern. So these are known as candles, and let's understand what a candle or candlestick pattern is. Mm, yeah. So yes, this is how a candle looks. And there are two types of candles mainly, red candle and green candle. So yes, yeah. So this is a green candle, as you can see, and this is a red candle. So green candle means, like for example, a stock or price is opening at 100, green. 100 and it closes at 200. That means there's a gain of 100 over here, and that represents a green candle. Like for just for an example, I'm saying that's a green, and a red, it opens at 200 and closes at 100, and the loss would be 100. So that just represents red. How a candle works is this is opening and this is closing for a red candle. Like for example, it just represents like I can show you another example. Yeah, over here, as you can see, yeah, Titan stock. Let's just for reference. Over here, the candle of the Titan stock represents that the Titan. Where's this thing? So let's try and understand the price movement of a candle over here. So yes, let's use the thing. Yeah. So over here, the stock opened at 2,612 or something like that, and it closed at 2,619. There's a gain of 9 or 7 points over here, and there's a gain. That means it's a green. It's a bullish candle. So that's the price momentum over here, and over here, let's understand the previous candle. It opened at somewhere close to 2,636 and closed at 2,612. That means it has a loss. It has a loss from 40 to 10 or 15, you say 25 or 30, some points. That that means it's a bearish candle. It represents this red. And let's go back to the video. Yeah. You can see these lines, or which we call them as wick. These are known as wick. A wick of a candle. Wick of a candle means that the price momentum it has done in a day. Like, let's see over here, the stock has opened at point A. This is a point A. this is point B, and this is point C. In on the particular days, let's consider this as some 10th January. Price opened at 100 and it went all the way up to 150, and again it came back to 50, and at the closing time it went back to 110. So at the end of the day, it went from 100 to 110. There's just 10 rupees or $10 of profit over here. That's what this candle represents. Okay, let's erase this. There's too much of stuff now over here. Yeah, so that's what the wick means. I'll explain you in a better way. So yeah, this is the candle. This is how a 1 day time frame is represented as a dozy. So we have doubts what are these wicks, right? So let's move to 15 minutes time frame from a 1 day. So yeah, the market has opened, like the starting point is at somewhere close to yeah, this is the starting candle. Yes, 9:15. The market opened at 2612, and the market closing price is at 2617. At the overall, at the end, from the starting of the day to end of the day, it just gained 5 points. But there's a lot of action or momentum going in between this. It made a high of 2629. It made a low of 2588. In a daily candle, all those doesn't matter. Only that matters would be the opening and closing, and these represent the wick. So you remember these points, right? 2630 or 29 and 2588. So let's go to daily candle. That's what this represents. Opening is like 2612, closing is 2619, the high is 2628 and 30, and the low is 2588. So that's how we read a candle. Most of the traders and most of the people use candlestick patterns to trade in short term and long term both, because it's a bit it's easier, and mass people or the volume uses candlesticks to read charts. So let's go further in, and there are different types of candles, candlestick patterns, how do they move and all. Let's discuss them in the few further videos. And this is just a representation of a line chart. How does a line chart work? It's normal, everybody can understand this, I guess. So what they're like indices. Indices are known as a summation or average of all the major stocks. Not every indices is a major stock. Like Nifty. Nifty means it's a summation of the top 50 stocks in NSE, National Stock Exchange of India. And Sensex is a summation of top 30 stocks in BSE, Bombay Stock Exchange. And Bank Nifty, my favorite, it's a summation of top 12 banking stocks. Top 12 in the sense they go by their volume, their net income, their the overall net worth, everything. They sum up. So, and yes, Nifty momentum or Bank Nifty or Sensex momentum, these all indices. Their momentum depends on how the stocks perform, how the top 50 stocks perform, how the top 12 stocks perform. This is just an average, a summation of those who are top 50 or 12 stocks. And these are known as indices. Like, yeah, I'll show you the difference between the indices. So Titan, Reliance, HDFC Bank, Kotak, these are equities, these are stocks. And Bank Nifty, these are like indices. So yeah, you can see that Bank Nifty is like continuously going green, because the reason for that would be banking stocks would are performing good. A few of the major banking stocks would be HDFC Bank. Yeah, you can see that there's some continuous rally in HDFC Bank. Yeah, there's some continuous rally in HDFC Bank. And there was a red candle yesterday, and that's the reason there was a red candle in Bank Nifty too. And few other would be the major stocks are in Bank Nifty, SBIN. Yeah. It's a clear thing. It's a clear bullish pattern in SBI and too. So there are many different ones too. Like for example, I'll show you a few others. Hmm, they go with portfolio. Yeah, Axis Bank, for example. Yes. Axis Bank, ICICI Bank, HDFC Bank, HDFC, AU Bank. They're different such banks which all sum up together to bring up an indices called Bank Nifty. So this is summation or average. So Bank Nifty, it's not like equity that you directly buy Bank Nifty and directly sell Bank Nifty. Bank Nifty goes with FNO, like futures and options. Let's come to that next. So basically, stock market. How do we trade in stock market? There are two types. Number one, equity, and number two. Oh, I guess I already did this stuff. Did I? Yeah. So yeah, equity and FNO. Equity are like Reliance, HDFC, or all that stuff. Like you just buy them or sell them directly. Buy or sell. So you can buy Reliance and you can sell Reliance. You can buy Reliance at 100, you can sell Reliance at 200. F&Os are like futures and options. Sorry for my bad handwriting. So F&Os are futures and options. So how do these perform? Like futures and options are like contracts or contracts of the stocks or contracts of the indices. So it's basically like hero representing some character. So these are like actors who act for the indices or who act for like these are like representatives. These are like representatives for the stock or indices. So if Bank Nifty goes from 100 to 200, one of the option of 100 call or put. I'll discuss what's a call or put later in the videos. They also move up by some points. If the Bank Nifty or if Reliance goes down by a few points, these options or futures even goes down by few points. There'll be an equation between that. To understand that better, I'll make further more videos. Let's not go deep into that right now because these are just some basics. So yeah, these are a few of the important stocks in Nifty 50: Wipro, UPL, Ultratech, Titan, TCS, Tata Steel, HDFC, so on. And these are the stocks, the major stocks in the 12 stocks of the Nifty Bank. SBI, NRBL, Kotak, Mahindra, IndusInd, HDFC, Federal, Axis, etc. And these are like few of the indices, the major ones. Sensex, it's like 30 stocks of BSC, Nifty 50, the major one everybody follows, and Nifty Bank, Nifty Mid Cap. And these are like global indices. Global indices in the sense SGX Nifty represents Singapore one, Nasdaq is US, DAX is Germany, FTSE is England. So like stock market is a thing that takes cues from all over the global. So if stocks in US are like falling or they're raising, it takes some views because these all work like all the stocks like Reliance has a broad network throughout the globe that all its import and export activities would be affected if some event occurs at some point A or point in USA or Australia. So if a company is affected, then its equity or stock is affected. Reliance would be affected. If Reliance is affected, then Nifty would go down because Reliance is one of the major contributor for Nifty. So that's how it works. Everything is interlinked. So it's like a puzzle. It's all a puzzle. You got to solve that. These are a few of the basics, and yeah, I'll teach how to place an order or simple stuff like that. Share of Reliance. So there are two actions. If you can buy a stock or buy a future contract, or you can short it. Like most of the people are not aware of what this short thing or sell thing does this. For example, consider Reliance is at what's the price? 2,535. You believe that there's some bad news occurring. Reliance Ambani had some heart attack. You know this, and nobody knows that. But you want to make some profit out of it. How do you do that? You just sell the Reliance. You just sell some 100 quantity, whatever quantity you want, and you're gonna sell that to your broker. Swipe to sell. You're gonna do that, and the amount you're gonna get charged just in intraday. I'll explain what's that. Okay, let's do that. Normally, the cost to you need 2,500 to sell that in long term. So you're gonna short the Reliance stock, and then you guess your target would be like it would fall 500 points. So as soon as it reaches 200 point 2000 2000 in price, you're gonna again buy it back. So and overall, if you sum up this trade, you're selling Reliance at 2500, and you're buying. Okay, that's yeah. So you're selling Reliance at sell 2500, buy 2000. So you have a gain of 500 over here. Let's like just view it in the reverse way. You're buying at 2000 and selling at 2500. Selling is like quite opposite. You're just selling at 2500 and buying at 2000. You're making 500 over here. So that's how it works. And normal buy is like you buy at 2000 and sell at 2500. If it's going up, you make profit. That's how that's how the second option, the sell option is, and that most of the people don't know that you can short the market. This is called short selling, and the buying procedure is like there are three types of orders: regular, cover, and AMO. Regular is like regular. You just place some price for that. Like I want to buy Reliance at 2500, and you just buy that. And if it's a market order, where's the market order? Whatever the price that market's offering you, 2535, you just buy it at that price. And as I said, there are two markets, NSE and BSE. You can see them over here. Yeah, NSE and BSE. And that's how regular works. And cover order, you can place your stop loss. Like if you're buying at 2500, 1000 shares, and you think that market's going to go to 2600, but some sudden news occurs and the market falls to 2400, something like that. So you're going to place your stop loss at 2400, so that if the market's going to go below that, you're going to exit your trade with 100 loss or something like that. And you can set your targets too. And AMO is aftermarket order. I guess we don't most. I will discuss about this later actually. So that's it for today, friends. Thank you.